No, I'm feeling much better today.
Are you?
Yeah.
You sure?
Yeah.
Don't need to wear a mask.
Talk. Hey.
You don't need to wear a mask.
Probably. Hello, ladies.
Well, hello. You're just down the pub with your mates, Monty, so it's absolutely fine.
Oh, I know that.
Okay. So I'm just Louisa on your walls there. Have you done?
I was just checking this is going through the right map.
Did you get drunk one
So
night?
that is, believe it or not, that is a world map.
That's a world map.
No, I don't get drunk. Yeah, it's a world map. Look, now you can maybe
Oh,
see
now I
it.
can see. I
It's
thought.
clearer.
Do you put pins in places where you've been?
No, because that is actually a
the
paper on the wall, so it's a bit good. What is again slightly concerning is the UK is actually bigger than France. On this, I suspect if this was in France, then we would be tiny weeny. And there's no Scotland, so no idea what happened there.
There's no Scotland.
Scotland, and that is not anything to do with my DIY skills that I missed it.
It's only a matter of time.
Just not there.
And can you point out Andorra to me, please?
Andorra's tiny, so it'll be
You're just making it up.
kind of here, won't it? No, that's Africa, so it'll be over there. It's between France and Spain. I know exactly where it is.
Good. I don't.
I'm not standing up because I've got my jogging bottoms on.
Welcome to today's episode of the Mortgage Mingle Podcast. Joining Louisa, Monty and I this week, I'm excited to introduce our guest, Rachel Lummis, the founder of Xpress Mortgages. Rachel is a well-respected professional in the mortgage industry with a wealth of experience. Based in West Byfleet, Surrey, Xpress Mortgages specialises in helping a diverse range of clients, and their commitment to client satisfaction is evident in their numerous 5-star Google reviews and the prestigious awards they've won over the years, including the Best Small Broker at the Mortgage Strategy Awards. Welcome, Rachel.
Hello, thank you for having me.
Is this the glasses edition, by the way? I was going to take my glasses off. But
of course we're all in glasses, aren't we?
Yeah, I rarely wear them.
It's an age thing, isn't it?
Yeah.
We need some young stock
now I can't see where
to come
you
and
are.
join us.
Has anyone thought about getting... So my glasses are sort of, what do they call it, age-related doobry-doobry, where I never used to wear glasses at all until I was about 40, yeah. So, but now you can have your eyes lasered, can't you, for the age-related side?
You can. So I had mine lasered for the non-age related stuff. It was for blindness about 20 years ago. I did a bog off, which was very good because I had one done and got the other one done for free. So I know, literally. And where I had them done, there was a spiral staircase I had to walk down with 2 patches on. It was the worst day ever, but it was brilliant because it worked. So a bit like you, Paul, I'm kind of thinking, is there a way to then try and get rid of the glasses? Because they're just a nuisance.
Jurgen Klopp, obviously, famously had it done, and he seems all right.
So, got a free
he's had
set
his teeth done as well,
we got a
hasn't
free
he?
set. That was buy one, get a set of teeth free.
They had that bog off. I had the eye bog off. Yeah. If only I'd known about the teeth bit.
Yeah.
Plus double neck
I need
points.
a full face.
I'd have the
done.
teeth done. I don't think I'd have the eyes. I'm not
I need
good
teeth,
with eyes. so-
face, tummy tuck.
Yeah,
the
let's
whole
stop
lot.
there. Let's stop there. It's a family.
Anyway,
Maybe we could go in together. Buy one, get one free.
Yeah.
Did
Obviously-
anybody miss that we're calling a general election?
Well,
Did
yeah, I
we-
was
did
just
we
about
miss
to
that one?
say.
So, yeah, of course. Yeah.
Yeah,
I'm
the
thinking
election
mortgage
was.
industry,
Well, I mean,
New housing secretary.
yeah, there are lots around that. Another new
Yeah,
one.
another one.
Number. We'll be
but
on
not
to
till
number
after
18,
July, so-
won't we?
Yeah. To be, we might have got one anyway, mightn't we? Because he is stepping down in July. So let's see what happens as to the result of the election.
Gove is another who's bottled it, isn't he? Another
Yes.
Tory MP bottling it.
Yes.
But actually, Gove is an interesting figure, and there's been quite a bit of talk about him this week in terms of, was he actually a good housing minister? And he seemed to at least want to get things done, didn't he? And maybe he didn't manage to get things through because of things like the election and obviously the Leasehold and Freehold Reform Act. Although it's become law, it hasn't got some of the things that were were fated as being big changes in it. So it's much watered down. So he's sort of not succeeded on that attempt. But was that really his fault? He seemed to, of all the housing ministers we've had over the last few years, he seems to at least have been someone who tried to do something.
He seemed to try and press things forward, didn't he? I mean, there were certain things that he didn't quite get over the line and change his mind about. But for the most part, I think that, you know, he did try to press things forward. He was quite, I suppose, he had quite a lot of focus in the north, for example. We haven't seen any benefit of his focus in the north, but there was certainly a lot of chatter about improving standards. So, you know, maybe if he'd have had a longer tenure, or if any of them had a longer tenure, we could actually get to see things done.
They don't have that long, do they? They come and go. But he did seem to be one of the more active. He had a lot on his agenda, but as you say, hasn't got it all done. But he seemed to be in the news a lot more than some of the others. So he was busy, that's for sure.
He was busy. Whether we've got busy fools or busy busies, who knows? But we'll see what comes next, won't we? Well, I didn't want to say that, Monty, but you did. So, you know, along you go.
But that's interesting. Go on, Louise.
No, so the only thing that came to mind with me as a result of this is obviously the Renters Reform Bill that's not going to go live, which I think the place that they got to with the Renters Reform Bill was in a pretty good shape. You know, it benefited both landlords and tenants. You know, we'd got it into a point where I think it was good to go, and actually got to the point where most of the backbenchers were actually in support of it loosely. I think if we do have a change of government, it'll concern me slightly because the rhetoric is all around ultimately totally protecting the tenant, which I fully understand, but not at the cost of the landlord, because obviously we still need a healthy private rental sector amongst all of the other housing agenda. So it does concern me that we might see some changes that might be detrimental towards the ultimate private rental sector, but we'll just have to see how that plays out if we do see a change of government. If we don't, then this one should pass, and you know it will be in the same condition that it's in today.
And is that a sense that you guys at Paragon, without being overly political, you sort of have that? Are you a little bit concerned? Because actually it's interesting reading a report that says 4 in 10 landlords are undecided on who to vote for in a general election.
Yeah, I don't think you need to put landlord on that, do you? Let's face it, 4 in 10 of the general public are probably confused about who to vote for in the forthcoming election, if at all. You know, you're hearing a lot of people that are suggesting they're not even going to bother because they've no confidence in any of the parties. So I suspect that is probably just the same as the rest of the population rather than just the landlord population. Surely. Well, you'd hope so, wouldn't you? But who knows? So I think, our sentiment at Paragon is clearly, you know, we want a healthy private rental sector because it is pinnacle to a healthy housing sector. So if we don't have that, because it's at the detriment of the landlords and ultimately the tenants suffer because they can't get properties. So you know what I suppose what we are now
to
seeing.
bash for forever now, isn't it? And I
always,
think the irony is
always,
yeah. The irony is, wasn't it Tony Blair's government that brought in the legislation that allowed buy-to-let to thrive and grow back in sort of early 90s? Pretty sure it was.
Correct.
Yeah.
Correct.
Yeah.
1996 was it?
Was
96,
it?
97, certainly in that sort
90s,
of time frame. You know, when we look at some of the pledges that both parties or the two main parties are making, there's nothing about housing on either of those pledges. It's about, you know, we're going to build some new towns, but how are we going to do that? What does the infrastructure look like? There's nothing. So it really concerns me that housing is so far down the agenda, yet it should be at the top of the agenda, or certainly within the top 5 of anybody's agenda.
Yeah. Anyway, Rachel. How are you seeing this? How is this coming across in the real world from your perspective as a broker, talking about the buy-to-let sector?
Yeah, it's got worse and worse over the years. So I have a mixture of, I used to call them dinner party landlords. Most of those sort of landlords have gone. You know, the clients that have 2 or 3 and It was for a pension, perhaps, instead of a pension. And it's actually got to the stage where some of those properties, with all the rates going up, even though the rents have gone up, with the rates going up, that some clients are having to top up their mortgage. I've got quite a few of those. So they're not making any money out of some of their properties, especially here in Surrey. I can understand that it might be different in different parts of the country, but we're certainly seeing that. So a lot of my clients are, deciding, do we sell, don't we? But I would say quite a few of them have actually sold up or in the process of selling up, because the figures just don't stack up. And then you've got to obviously pay tax as well on your rental income. So that, if someone's already having to top up just to pay an interest-only mortgage because their rent's coming in a bit short, that is a problem. So I'm seeing that. But on the other side, a lot of my portfolio clients that have got from anything from 10 to 270 properties, they're buying up and they're doing things differently. So I think those that just dabbled in it, as well as had full-time jobs or not, just really have decided that maybe it's over now. It's been going on for many, many years. And I think just it's got to a point where it just doesn't work for some people. So we are seeing that. The purchases obviously has gone down as well. The buy-to-let, we're not seeing as many clients purchasing, apart from those that already have their portfolios, and they're finding some bargains out there.
That's a bit
but
cliche,
yeah,
but
it's
is
definitely
that true?
changed.
That's what's happening. You're seeing those with portfolios saying that this is a golden opportunity right now.
Yeah, I've got quite a few clients who can't get enough funds to go again. They're remortgaging, they're finding opportunities out there and saying, this has come along. Some of my landlords purchase properties more than I buy shoes or handbags. It literally is. I have one that said, I was out this weekend for lunch and I found a flat, and I'm like, that's what you do when you go out for lunch. Just stop and window shop and end up buying a flat. So yeah, that's definitely the case, and different types of properties as well. I'm seeing a lot more semi-commercial, which I didn't do as in the past so much. HMOs for sure. That's more popular now.
Why do you think people are going into semi-commercial?
I think just I'm not sure. More opportunities they're finding.
The yields,
maybe
the yields are really strong as well. So, and I think that there's more and more lenders potentially offering a semi-commercial. I mean, Foundation, for example, have just launched a semi-commercial offering. So I think there's more opportunities, but certainly yields are really, really strong on semi-commercial. And, Gove was quite keen to revive the high street. So quite a few properties along the high street may well start to come back to life, hopefully. Obviously, we know Gove after July, but, whoever's next may well continue with that high street revival.
Yeah, I did find for a time that the pure commercial, have some clients that don't do as much commercial as normal standard buy-to-let. Obviously, that's my core business. But the commercial, when clients did come to me and they found some shops on the high street, there is hardly any lender that will lend. A lot of them sort of pulled out, and the couple that I would have ordinarily gone to, that I said, I've got this shop, 150,000. They were like, no, our minimum loan is $1 million, and then some brought it down to 250. So for those shops on the high street, there's not much funding. I found a few more lenders now, and it seems to be getting a little bit better. But for a time, commercial was really not flavour of the month. But the semi-commercial definitely is more so. Before, lenders would say, we do semi-commercial, and then you'd look at all of the rules. And but as you say, Foundation have come in quite big. And it's just clients finding something a bit different to the normal 2-bed flat or 3-bed terraced house, which in Surrey, it doesn't stack up now. They need to find something a bit different. So that's what we're seeing, a bit more quirky.
Yeah,
they're all moving to Yorkshire. That's what it is, where you can buy a full street.
Yeah, it's
chimney pots for the same price as your 3-bed semi in Surrey.
There's definitely a rush to yield, isn't it? Whether it's HMOs or student or up north or etc.
And I suppose with
London's a bit quieter,
real
but we've seen the same range in terms of professional landlords.
But also, I mean, semi-commercial, depend on how you do it. Again, the lender will, it depends on, the risk weighting that they've got to put in place for semi-commercial. So providing the vast majority is housing as opposed to, commercial premises, then they can risk weight at a lower level. Whereas if the majority is commercial and then less on the housing, then the risk weighting is a lot higher. So then your pricing becomes unrealistic, really. So there's lots of, hence why some of them will say it's got to be a minimum of 50% in residential, the rest can be commercial. It all depends on that risk weighting.
So Rachel, it'd be interesting to get your general take actually on the challenges you're having this at the moment as a broker. We just spoken about buy-to-let there. What other challenges are you having? Are you seeing?
I think the big one is the constant changing of rates and people's expectations. So most of my day-to-day now, it used to be dealing with new inquiries. Now a certain amount of my day is dealing with current inquiries because the lenders keep changing the rates, and so I have to keep checking up on cases that I have done 3 months ago. For instance, if two lenders came out today to say we've changed rates, some of them don't even tell you what they're changing to, which isn't helpful. So we know, for instance, that they're changing rates and they'll be out tomorrow. So that means that tomorrow I have to check and see if they're up or down. They sometimes only change certain products or certain loan to value brackets. So it's a lot of my time at the moment isn't dealing with new inquiries, it's dealing with the current inquiries, which is driving me insane.
And that's quite a manual process, I suppose. Costing
so much time. It is. There are apps out at the moment. I've looked into getting some new technology which checks all the rates by the use of an app. Because yes, at the moment it's all manual. So if someone's with Santander and they're bringing out different rates tomorrow, I have to look at my list of offers that I've got out with Santander, and I will have some product transfers, some purchases, some remortgages. And so I'll have to look at each individual client. So if I've got, say, 7 clients with Santander today, tomorrow I would have to look at 7 different clients, look what they've got now, look at the rates that are being bought out, get back to the client. If I need to change it, it's more paperwork, another suitability letter, and on it goes. It's hours and hours of time. So that is my biggest challenge right now.
So Rachel, just to play devil's advocate, your customer comes in on day one and you offer them whatever it is, and then you're constantly changing that. Is that because the customer's asked you to do that, or is that because you just feel obliged to do that? How is that working?
It's, to be fair, it's probably because I overpromise.
Right.
It'll be me. It'll be me saying, okay, let's get this application in now. Let's secure this rate, because who knows what's going to happen in the future. If you've got someone who says, this is my situation, my deal's ending in 6 months, I would always say, look, let's secure something today. None of us knew that Liz Truss was going to put the economy into freefall.
I think in some instances we can be our own worst enemy because we're creating a lot of work, which is, in some respects, is necessary because you feel obliged to support your customers throughout their transaction, which is really important. But ultimately, going back to what we talked about a couple of weeks ago, it's creating a problem for you because you're creating additional work for yourself. And actually, the lenders are now going, right, okay, well, if all we're going to do is keep churning all of this business, we're probably going to be less inclined to want to do that reprice activity. So actually, you might end up getting what you want because there's going to be less reprice activity, because they're going to have a more strategic view around how they price going forward because of all of that churn. So you might end up, not be careful what you wish for, because that's not what this is. It's more about the fact that you might end up not having to do it as often because ultimately the lenders stop pricing as often.
There are
the trouble is, it's trying to it's trying to win the business. Monty probably
I get that
this
completely.
If someone comes in and they say, "Oh, I can go myself to Santander," I'll say, "No, don't. I'll do it for you. We might be on offer number 7 by the time you complete, so you won't be able to keep up. Let me do it." And then, I don't really want to pay a fee because no, that's fine. We're doing work that is, £200 some of these proc fees. The hours, that doesn't even cover the admin lady keying in the cases. It's so last year, I'll be honest, I've been in this business 18 years, and last year was our worst for profit. We still made a profit. We've made a profit, and it's been going up every year over the 18 years. But last year was dreadful. It was the worst year. And that's because we're fighting for business. It's mostly product transfers. The product transfer fees that we get are, some lenders are okay. Some lenders pay the full proc fee. Other lenders, it's tiny. And it's all that work. So it's getting up at 7, much earlier, and finishing at 10. Sometimes the news at 10's finished by the time I clock off. It's all that extra work. And actually, it's not fun. None of it's fun at the moment. It's stressful because I've had occasions where I might be out and then you've got till 5 o'clock to secure this rate. It's not so much, we had that in the past a few months ago. That felt maybe longer because time just flies, doesn't it? At the moment, it feels a bit more relaxed doing that now. A few months ago, it was very stressful when they pulled at short notice. Now we've got more notice. It feels like we're getting more notice, but they're changing, and sometimes the rates are changing 0.06, and it's all that work. But then if you don't do it and then the rate goes up, ultimately we've got to get the best deal for the customer from the day that you submit the application to the end, and that can go up and down and do whatever in the meantime, as long as we end up on the best rate. You can't think, I'll do that next week, because then that could be gone.
This is a
because
general
then it's
question.
not all going one way.
This is a general question. Do you think lenders appreciate the level of work that you guys as brokers put into?
No.
I don't think some brokers do, because I've heard some brokers say, "Oh, that's an easy job." And I think, are you having an absolute laugh? Because I'd like to invite someone to come and see me do a product transfer. I will search the whole market because I have to. I have to say that the best option for you is to stay with this lender. We could get ABC, but this is your lender, and I'll monitor the market, etc. So, of one client, for instance, NatWest, product transfer, did it himself. He had a good few months. It may have been 3 months, that one. And I said, "No, I'll do it for you." It's actually a friend. And he said, "If you don't mind." I said, "No, it's fine." I think we changed it 6 times. The hours, I wish that I could write these hours down. It's not just a click of a few buttons. It's a fact find, suitability letter. It's researching the whole of the market. It's then doing the application, then doing all the compliance. It's getting the ID, getting the pay slips, getting the bank statements. We still need everything. It doesn't mean just because it's a PT and you press one button, and it's not one button. It never is. You still have to do all your compliance and all your research. Yes, the actual application process is quicker. Then there won't be evaluation. There won't be underwriting. So you save that bit, but you're revisiting that case. My record is 7 mortgage offers because the rates kept going down. And it's not just my time, because if NatWest brought the rate down, I'd look at NatWest, see what they had to offer, work it out, email the client, right, this is what you've got. And you have to explain it all. You can't just do it because the end date might have changed as well. It might not be ending in June 2029 now. It might be September. So we just need to check that actually that's okay. So there's still lots of emails, lots of talks. And you've got to produce the illustration. Then they say, yes, we'll have that. Thank you. That's going to save another £25. And then you have to do all your paperwork. and then a suitability letter, and then note on the file so that your colleagues know what's happening. It's got to be on the system so that you know what's happened. Oh, we're on offer number 4. That all takes hours and hours and hours. And anyone that says it's a press of a button, come on in and do some product transfers for me then. Let me see this magic button that you've got.
Would think there's so many things to unpack from there. It's as I say, there's so much to take away from there. There is a general misunderstanding of what brokers do. There really is, and a lot of lenders will say, yeah, but there's no admin. But if you're a business owner, you still got admin. You still have the cost of the admin there. They're still there. You're not suddenly getting rid of admin. But in terms of all of this, the amount of time we're now spending with our clients is so much more, which is a good thing. And people forget that actually from a compliance point of view, we need to set our stall out from the off with clients. So we need to actually put down in our reasons why letter how many times we're going to review their situation if rates change. And if we don't lock in, first of all, early, then as we've seen recently, actually rates have increased. So actually for the brokers who thought actually don't lock in now, people now coming up for completion from maybe 4 or 5 months ago, they're actually finding themselves on a worse rate now because rates have gone up. And if you're not constantly on it, then there's so much information around. So if we're not proactively phoning up our clients and saying, actually, there's a better rate available for you, you're running the risk that they are either phoning up or seeing something in the press, or a lot of them will see what's on the website. A lot of them will look at things like Money Saving Expert and all these other sites, and they will see that actually, oh, Santander's rates have gone down. Oh, my broker hasn't called me. Let me just speak to Santander. And before you know it, you've lost the business. So you've got a
bad review on Google or whatever it is, and
you might get a bad review, and it's a lot more. The whole world's a lot more litigious now. So if you miss something, the rate's gone up. Then you have a whole complaint. So a lot of people don't, and the people, Rach, on social media who are brokers, who are saying, oh, it's really easy, I'll just press a button. They're just doing it for attention. That's all they're doing it for.
Yeah.
Because if you know, and what's interesting for me is listening to you, and obviously you've spoken really eloquently at the Amy board meetings, is I speak to loads of people like you all around the country, brokers who, and your story is exactly the same. People don't understand, this is what I'm doing. You did well to make profit, by the way, because there are a lot of brokers out there all around the country who didn't last year because it's been so tough for them. So this story is what I'm hearing. So when I'm going to talk to lenders, this is why I get so passionate about it when I'm talking to lenders about all of these things, is no, the real story out there is exactly how Rachel explained. It's really, really tough. They're spending more and more time and all this stuff for less and less money. And actually, we've even, and just to ask maybe your opinion on this, is we've actually started to see some lenders now charge if you change an offer. So there are a couple of lenders who are now charging an admin fee if they make an offer and then you want that changed because rates have gone down. Whereas as a broker, it's really hard for a broker to do that. Although some brokers are trying to. And that's...
Yeah, I think you'll find more of that, Monty, because at the end of the day, exactly what Rachel's just described, which you did beautifully, Rachel, and I would love for you to speak openly in certain environments. But the challenge that you also face is all of that admin and everything else that you're doing in the background to try and save money for your customer. The lender's having to do the same thing as well. So all that's happening is that profit margins are being eroded from your point of view and also from the lender point of view, as we're chasing the absolute best rate for the customer who hasn't asked for that So that was my point in asking for you in the first instance. I think we are being slightly overzealous because we're fearful of the fact that the customer is going to go either direct to the lender and or go to another broker. And so I think what is ultimately going to happen is you're going to see less choice because there'll be less repricing, which ultimately might resolve the problem overall because you won't have to do that churn as often. Or you'll start seeing lenders charging for the changing of those products, or you'll start to see that timeline, which again I think will be potentially beneficial, is a timeline around PTs in particular that will reduce out from that 6 months down to maybe 4 months, maybe even 3 months, which feels more realistic anyway, to not have to have that 6 months window. So I fear that as a result of all of these, us trying to protect the customer and giving them the very best service, which absolutely should be at the centre of everything we all do, is costing us all time, money, effort, sweat and toil that potentially is unnecessary. So I think you said earlier on, Monty, this is a subject in itself that we probably need to unpick, because I know of some very successful brokers that visit their customer once, and that's it. You get what you get, and you don't have any more. And some of them are big brands in the industry, and they do set the stall out. So it might be something that we can think about from this Mortgage Minglers to try and get some of them on. If they're brave enough to say that we don't revisit our customers, they might not be brave enough to say it, on camera.
No, because they'd come to Monty and I, wouldn't they? Because we look after our customers.
But it'd be a good debate to have, because actually it might well be that, there's a hybrid here that feels like there's a halfway house, that the customer still gets what they want, and we as lenders and as brokers also get what we want. And that's the direction of travel I think we need to go in.
Yeah, stress levels tricky, as well are through the roof.
I think part of the frustration is that if it starts to affect lenders' profits, they can just put a fee on it like that. If it starts to affect brokers, we struggle to do that. And yet again, it feels, from a broker perspective, it feels like, it's always the broker who gets the kicking. And that's the frustration that I feel from brokers on the ground all over the country.
We've spoken before about communication between lenders and brokers, and I feel sometimes the role of a broker is almost to be an ambassador for the lender. But if the lender isn't communicating properly with the broker, then it feels like the buck stops with the broker, because you're doing the best you can, but with half of the story.
Yeah, I think this is I think communication between broker and lender coming out of COVID is fantastic. I think it's never been so strong. I think some of the stuff that, especially the relationship between the trade bodies, AMI, IMLA, UK Finance, really, really good. The BSA, everyone seems to be communicating very, very well. I worry now that because of the last 6-9 months, there's starting to be some fraying at the edges. And there are just little points of communication, like something as simple as Rachel said, when rates are changing, tell us what the bloody rate changes are. At least give us something to work with, rather than just saying, rates are changing. That's useless to us. How can we manage our clients? How can we manage our expectations? And some lenders pushing on with tech in a way that you can see where they're going with it. You can see that potentially that's with a view to cutting out the broker maybe further down in the future. There are just some of those little things that are appearing. But in the most, our relationship with broker lender, we're codependents, aren't we? And as a broker, I've always said, we sell other people's products to people who don't want those products. That's what we do. We distribute lenders' products.
Wow.
And the customers don't even want the product. They want the home. And
they want a house.
They want a house. They want the dream. So we are codependent on each other, and we have to keep that relationship strong.
We do, but I think you're right, Monty. I think there are some tensions afoot, and I think a lot of it is around this, what we've just talked about, the fact that you are revisiting your customers as often as you are, and we're revisiting them at the same times, kind of thing. So I think that there are some tensions that are brewing underneath, but I don't think that they're beyond, the possibility of fixing them because of the strong relationships that are already in place.
Are there any lenders
there
that
has
are doing
to be
it
an
well?
easier way. It's just been so stressful for everyone.
Any lenders, in your opinion, you sort of go, do you know what? They're really
Paragon are doing it well.
Yeah.
We're really good.
They're doing really well.
It's
Award-winning
really
Paragon.
I think there are
difficult,
loads of lenders who are doing it well. Yeah, award-winning Paragon. I think there are loads of lenders who are doing it well. I think, people like One Savings Bank, people like Paragon, a lot of the specialist lenders, especially, a lot of the building societies, especially. And
so you're saying the high street are useless?
A couple of the top six. I think it's mainly, the high street lenders. And we've got to remember as brokers, it's not the intermediary teams who we all know and love who are the problem. It's the people above them who maybe still don't quite understand the intermediary sector. They just see a cost. And I think what sometimes we have to appreciate is that all the intermediary sector people that we know are on our side because their jobs depend on it as well. And actually, we have to appreciate the internal battles sometimes they're having between a new CEO or something who might not quite understand why is 80% of our business, 90% of our business going through intermediaries. So it's that they have those constant battles, and that's part of the relationship with lenders.